Hi, this is Tina VanDerwerker with Berkshire Hathaway Home Services. I'm here with Phil Reece from Homestead Funding. Good morning. How are you?
Morning, Tina. Doing great.
Great. So let's talk a little bit about mortgages. But first, we'll kind of mention, tell me a little bit about you. How did you get started? How long have you been doing the business? Those kind of things.
So I started in 2005. My wife was friends with somebody who was leaving the business and had been with Homestead for, I think, well over a decade or more. And she had been encouraging me to interview for the company for the position. At that time, I was working as a retail store manager in Crossgates Mall. If you know the local area, you know that mall. And I wanted a change of pace and a different career and something that could give me the opportunity for better earning, better income potential. And I interviewed and 17 years later, I'm still here. So,
Wow.
yeah.
So you must like it.
I do. Like every job, it has its challenges, but I find the challenge of placing a loan for sometimes, harder situations, more challenging, financial situations for clients, or even just transactions that may have some peculiar aspects to them. The reward for me is the client closing at the end of the day with a happy experience, and it makes everything else worth it.
Yeah, absolutely. No, I agree. That's, why I do what I do as well. So it's been a pretty challenging couple of years with mortgages and interest rates and all that kind of stuff. So what do you see as the impact on home buyers right now?
It's unknown. I think we're in an uncertain market right now. The last 2.5 years, we've dealt with just an unprecedented amount of volume, activity. And when I say volume for the layperson, it's just sort of understanding the amount of contracts coming across my desk and my email. And, anybody who worked in the mortgage business for the last 2.5 years probably wrote a lot of loans, hopefully made some money, hopefully put it away, because we may be looking at a little slower market the next few years.
Right.
But right now it's unknown. And I think a lot of it has to do with the fact that in general, the United States and the global financial sectors really don't know what to expect for the next 6 to 12 to 18 months. The Fed doesn't know. The Fed's doing their best to fight inflation, which is really kind of their biggest topic right now. And there's just a lot of uncertainty. And if you look at the data from consumer confidence and other metrics that kind of judge people's behaviors of the economy, there's a lot of uncertainty, and homeowners just really don't know what to expect. So we don't either. We'll have to see.
Right. So, yeah, I mean, obviously with the uncertainty of the interest rates and the buyer's market, and, so that impacts the homeowners as well, because they probably don't know what to do either. Is it a good time to sell? Are there people out there buying?
Yeah.
So
I think social media is tough too, because when, in social media, you're going to get someone's anecdote, right? It's not necessarily always data driven. You don't get,
of
good
course.
information like real journalism. But
Right.
the other issue with real journalism is the sensational headlines. So you may have a headline come out saying unprecedented mortgage volatility, interest rates due for some gloom. And what they're trying to do is get clicks, of course. And what that means is that we may see an interest rate go from something fairly low to something slightly higher than fairly low. For example, go from like 5% to 5.75% within an overnight span. And in our world, that is a really sharp rise for an interest rate. But still, 5.75% is pretty close to the median rate if you take the average over 40 years. So it's all perspective. And the challenge that we have is trying to make homeowners understand that still is a good time to buy, as long as you're buying within your means.
Right. Yeah. Well, there are still buyers out there. And like we've talked about before, is, people can still buy a house. They may not buy the, let's say 250,000, maybe it's 200,000 or whatever. But, I think when I bought my first house in the 90s, 5.25% was was beautiful. Like, that would be the best rate because it was normally 8 or 9%. And,
Exactly.
I wasn't making any more than I would have been now. So, it's just, I know it's kind of confusing for a lot of people, because of the low inventory, they're not really sure what they're looking for. They can't find what they're looking for. But, ultimately it is still a good time for sellers to sell and for buyers to buy.
It is. It is.
Yeah.
And I think the thing is that it's always a good time to buy. And what I mean by that is that there's always a need. No one buys. Houses are not an impulse buy. It's not like you're sitting in the grocery line. You're really hungry and you grab that Snickers because you know you're going to devour it on the way home.
Right.
It's a house, right? So you make a big purchase. The one good thing about a house is that, like most marriages, you're not. It's something that doesn't have to last forever. You can refinance a mortgage. So if you close with a loan that happens to be in the mid threes, and we get that next low rate environment, which I'm sure at some point you're going to ask me predictions, but I will say that at some point we will have a lower rate environment than where we are now. And that's a great opportunity to reach back out to your lender, or if you had a bad experience with your previous lender, a new lender, and ask what the current interest rate is and see if it makes sense to refinance the rate to something lower. So you don't have to commit to that mortgage forever.
True. Yeah, no, that's a good point. And I know at the beginning of 2020, or 2021, there were a lot of refis, which is why, we had such a hard time getting a lot of regular mortgages through because there were so many refis that were going on. Obviously that slowed down a little bit, but so yeah, speaking of the future and predicting, where do you kind of see the market going? I know you said there's going to be a lot of volatility and it's really uncertain, but is there anything that people can kind of hang their hat on? Is it really just, see what happens and go with it?
Yeah. Before I answer the question, just for the viewers, there's a little inside joke with my predictions because every year, as Tina knows in her office, I give my predictions for the upcoming year. It's your first sales meeting in January, and I always grade myself on the previous year's predictions to see how I did because you have to have some humility in life.
Sure.
I've done terrible the last 2 years when it comes to predictions, but so has everybody. So at least I'm in I'm in the same boat as a lot of very smart people.
Right.
Here's the thing. I think the Fed's policies are going to really drive what happens over the next 12 to 18 months. And the Fed right now is very data driven. And what I mean by that is this. They're looking at metrics. They're looking at a lot of data from a variety of sources for the number one purpose of fighting inflation. But they have a really tough job because they can just jack the interest rate up on the Fed fund rate and slow down inflation, but they can also slow down the economy and put us into an immediate recession or even worse. So they have a tough balance with trying to fight the cost of inflation and all goods increasing in cost, but not stifle the economy at the same time. So if I look at the calendar here, we had non-farm payroll numbers that came out last Friday, and they ended up kind of, really having some increased volatility on Friday. Friday was a very volatile day for mortgage rates. And what I mean by that is just a lot of ups and downs. They actually changed multiple times during the day. And we are actually a mortgage correspondent lender. And what that means is we actually represent rates from a variety of sources. It could be up to a dozen different lenders. So we can kind of watch their trend of rates during the day, like watching the stocks. The next one, the very important day, is going to be on the 13th, and that's CPI, Consumer Price Index. And that is really the best benchmark for where inflation is going to go. And then there are some other things like unemployment that same week, and then the Fed will be meeting the following week. So when the Fed meets on the 21st, it'll be interesting to see what they say because we'll have the metrics from those previous weeks.
Right.
And that's, if I have to actually just answer your question directly, I think what we're looking at is increased volatility. That's not going to be a shocker. I think we're going to see some of these indexes come up with good numbers and bad numbers, and they will ebb and flow each month. And the Fed will be making micro adjustments for each of those. And when they do, that's going to create more volatility in the market. So if you have a good interest rate on a day, you should lock it and don't hope for better the next day because the chances are it could be gone. I don't know exactly where rates will be, but I don't think it's going to be out of the realm of possibility to maybe see something dance in the sixes and come back to the fives.
Yeah.
And if I have to wager a guess over the next 12 months, I probably will see that swing of rates. I don't know we're going to see 2.625 like we did early pandemic.
Yeah.
That's probably likely to never come back in the rest of my career, but
I was gonna say probably not anytime soon for sure.
no, and I'd love it to, but I
Yeah.
don't think it will.
Yeah.
So
No.
that's what I expect to see. In the mortgage world, I think we're going to continue to see increased creativity. And what I mean by that are rules through Fannie Mae and Freddie Mac that create the rules for conventional financing. FHA and VA try to find ways to loosen guidelines a bit. They really tightened the reins a lot in the beginning of the pandemic because of their uncertainty, and obviously everyone was really scrambling to figure out what was going to happen back then. But
Sure.
they're starting to get a little more loose, and the alternative finance market is really starting to bloom again, with better safeguards than what we had in the early 2000s. So
Yeah. Yeah.
I think we're going to see some more creativity in the market too.
Yeah. So to that point too, what does homestead funding do to try to help buyers be able to buy, or, if somebody's interested in refinancing, kind of, what are your products and what do you offer for people?
So for refis, we look at our past client database and we look for opportunities for lowering someone's interest rate. And if we have an opportunity to lower an interest rate, we'll reach out to that client with a proposal and let them know, hey, I found something here that can save you money. It can save you short-term interest by lowering your payment. It can save you long-term interest. It can help pay your mortgage off earlier. And having that conversation to really find out what motivates that client financially. Is it their goal to pay the mortgage off as quickly as humanly possible? Or do they just want to free up some monthly cash flow by lowering their interest rate and lowering the actual monthly payment? So refis, that's going to be market driven. I don't have control over that, but when the opportunity arises, we reach out and make it proactive for our clients, which is awesome.
Yeah.
On the purchase end of things, we're always looking for creative loan options. The other thing too is that our corporate team is dynamite about looking at new guidelines. Whenever those new guidelines come out, whether it be through FHA or the conventional powers that be, letting our sales team know the day they receive those guidelines so we can enact them and tell a client, hey, I just found out that a rule regarding student loan payments, for example, got looser. And now it allows you to qualify for a $225,000 house instead of $200,000. The other thing too is that we continually train, and it's my job to help our team in our branch with running our sales meetings.
Okay.
But I'm always communicating with my colleagues who are kind of at the same level with me about products that we have to make sure that we're always aware of everything, and just offer the best service we can to our clients. And then I think the last is just looking at products we maybe haven't used in a while. A good example of that is Sony May. It's a New York State loan program that's 3% down, can actually be 0% down with something called a DPAL. And it fell out of favor for a while because we had other loans that could close quicker. And with the short timelines of the pandemic, we really didn't have the luxury to use some of those programs. But we're looking at programs we maybe haven't touched in a while to make housing more affordable for our clients.
Yeah, and I think I used a Sunny May, in the 90s when I bought my first house.
That's awesome. I love it.
Yeah, for sure. So is there anything else you want to kind of talk about?
I'd love to know what you think about the market as a realtor. What's the, you're kind of the barometer for clients. You have a lot more FaceTime with them than we do. You're walking houses. You're actually spending physical time with the clients where I don't always have that opportunity. What are they telling you? What's your general sense of consumer confidence when it comes to housing?
Yeah, I mean, I really try to educate the clients because I want them to know that I'm on their side. So I will give them the best tools and the best resources that I can with the information that I've been given. We are seeing houses staying on the market a little bit longer. We are seeing the opportunity to get into a house maybe a second time, which is great because, like you said, it's a big purchase and it's, people were just going crazy sometimes, buying houses sight unseen until the offer was accepted, which is bananas. But yeah, I mean, I think I still have buyers buying, and I've had a few people that, for whatever reason didn't put their house on the market, which, obviously life happens and things change a little bit. But, there are still people buying, and,
Yeah.
I try to give them the best advice that I can as far as, is this the right house for you? And even though the inventory is low, I tell them, if you don't love it, like, don't buy it. I mean, there will be another one. It may not be tomorrow or next week, but there will be a house that's coming. So
That's great. That mirrors my experience. I think patience is the key because you
for
mentioned
sure.
it before. There's still a lack of inventory. I'm starting to see it get a little better. You are right. I have clients who are able to see a home over the weekend. I had a client working with a colleague of yours in your office, and they were able to see the house for a second time.
Yeah.
And now they're under contract for this house with an FHA
Nice.
loan and a
Nice.
small seller concession. And
Yeah.
if you know it while you're watching this, what FHA with a seller concession means, it was unobtainium during the pandemic because things were so
Definitely.
crazy. You couldn't do that.
No, definitely
So
not.
I feel like we're more back in a normal market-ish,
Seems like it, yeah.
as normal can be.
Normal.
Yeah, exactly. Huge air quotes.
Yeah, for sure.
So yeah, I think the only thing I'd like to mention in closing is that one of the reasons I work for Homestead Funding is the fact that in our local pocket of real estate, we are a very recognizable company, and I think our brand precedes itself in a good way. People overwhelmingly have a great experience working with us. I have an awesome team that supports me. My processor, Lindsay, our underwriting staff, they're always available to answer questions about challenging files and situations. And with almost 2 decades of experience, I don't know everything. I never will. So I rely on these really smart people to help me, guide the loans through in a really smooth way, so the client doesn't see kind of the clunky work, right? It's the old expression, you never want to see how the sausage is made. So it's the team behind us that supports us, and the sales staff in general can't be as successful as we are without the people we have guiding us. So it's a great company, and I could see myself here for the rest of my career. So if anybody's ever worked with another bank and they want a different experience, I'd love to help them. And just call me, and I'll do what I can to assist, or even just give you guidance and answer questions if that's all you're looking for.
Well, thank you so much. I definitely use you as my resource. So
Thanks,
it works out really well. Phil Reece with Homestead Funding, and I am Tina VanDerwerker with Berkshire Hathaway Home Services.